I'm very pleased to welcome back to the show right now Ryan Irvine. Of course, you know him as Keystocks Financial. You can find him at keystocks.com, Keystone Financial rather, keystocks.com. Hey, Ryan, we're just talking about the what have you done for me lately kind of attitude of people, but I got to say this. The last time you were on our show, and you did this at the World Outlook Conference, where the performance of your small cap portfolio has been spectacular over the years. But you're talking to us about infrastructure, and you said, hey, you got to buy something called International Road Dynamics. Of course, you always say make sure it's appropriate for your portfolio, et cetera, and you describe them well. But I'll tell you this. Of course, you were recommending it as early as $2.30, and I think at the Outlook Conference it was $2.70. Well, presto, within 60 days the thing's taken over at $4.25. And I'm thinking, well, you did that also with another company you recommended on Money Talks and at the World Outlook, which was Sandvine Corporation. Man, that one gets taken over. That's a 50% gain. Another one you've recommended at the World Outlook and on our show, Maris Labs International, taken over. My goodness gracious. I mean, you got the Midas touch when it comes to figuring out companies that might be potential takeover targets. I mean, what gives in this environment?
I thank you for that introduction, obviously. I have to say, I gotta love your music theme, just as an aside here.
Okay.
You finally got my girlfriend listening to the show.
Oh, there you go.
It's great to see. It's great to see. And you're not taking requests, are you?
No, not yet. But, hey, email me one, and I definitely get it on next week.
We will do that. Maybe the Boys of Summer from Don.
Oh, love it. Love it. Yeah.
But you were talking about International Road Dynamics and these takeovers. It's really been the story of this year for us in 2017. It's how we've been able to produce returns, because you look at the TSX itself is actually down this year, and relative to the U.S. exchanges, the underperformance is very significant here. So. And if you're a Canadian who chose to deploy funds in U.S. stocks to diversify down there, the weakness in the U.S. dollar and the strength in the Canadian dollar has taken a chunk out of those gains. So it's been a bit of a tough year. But this M&A activity, you mentioned those three stocks. We only have 15 stocks in our Canadian small cap growth stock portfolio, and those were three of them in there that got taken over this year. So we have additional coverage that we cover. There's a number of additional companies. We have three other companies that got taken over this year. Just this past week, a company called Pacific Insight, and they're based in Nelson, BC, got taken over for a 75% premium. So you are seeing a great deal of this activity right now, this M&A type activity in the small cap in the sector and in Canada. And I think there's a number of factors, if you want me to go into, which are kind of conspiring to point us in that direction right now.
Yeah. Dude, just give me a quick summary of those.
Yeah. Well, interest rate spikes. Money is still cheap right now to finance acquisitions, but the fear of interest rates going slightly higher. If there's a group looking to make an acquisition, you do it sooner rather than later. It's like if you were pre-approved for a mortgage at a great rate and you see those rates potentially rising, you're more likely to jump in on that house near term and buy it. So that's what we're seeing there. There's been a rise of private equity. Funds are flush with cash and on the hunt for acquisitions. So we're seeing that money being deployed in the market. We've seen cycles like this in the past. A company called Sleep Country, which many of your listeners probably know, we talked about on the show about 10 years ago, got bought out in private equity. That same thing happened to Sandvine, a company we recommended at the Outlook a couple of years ago. We think it gets taken private 5 to 10 years down the road. They lever it up a little bit, and they put it back into the public market. So you're seeing this cycle of companies that's happening in that sector. So there's also just strong equity markets in the U.S. for 5 years, has people feeling quite good, and you see more M&A activity when the market or companies are feeling good with the cash, and they're a little looser with it at those times.
If you can, sort of a quick answer this when my Barbara Walters side of me comes out. But are you selecting stocks, and do you have one eye on its potential for a takeover? Or do you say, hey, that'll just be a byproduct of running the company properly?
Yeah, I think that's a great point right there. We'd never buy a company specifically as an exit strategy to be a takeover. You want to look at a great company that's a good business that's trading at a fair price. The rest of that usually takes care of itself. But if you look at the commonalities between these businesses, all of them have a strong history of profitability. International Road Dynamics, Sandvine, another company called IWG Technology, all of those companies had huge net cash positions. All three of those had 25% of their market cap or more in cash, and they had zero debt. So it makes it easy to acquire because your net purchase price is actually lower than the price tag. Like if you bought a car, it'd be like if I bought a car tomorrow and I found a bunch of cash in the trunk. Well, suddenly your cash price is down. So that it makes it easier to purchase. Each of these companies, too, own patents, proprietary technology, which gives them a defensible competitive position. So we often look at this as it holds barriers to entry to getting into that business. It's more attractive to take over. So we see this trend continuing, M&A activity in the small cap sector in Canada, because money is still cheap. The access to capital is still good, and there's cash sitting on the balance sheets. But it has a cautionary side to it as well, because when we see people being very greedy in the market, we get a little bit fearful. So it's more a commentary on, you'd think it would be that all these companies are on sale. And there's some companies that are trading at reasonable prices, but more of it is that the acquirers are in great positions to make these acquisitions, and they're out there making those acquisitions now. It's not that these companies are incredibly on sale. 5 years ago, 6 years ago, I could have picked out about 50 companies in the small cap market that probably could have been acquired. Today, there's about 5 or 6 that I would point at that might be. So it is strange that, if you looked at 2008, 2009, the credit crisis, there was a ton of companies there that we would have been screaming at the top of our lungs that say make great acquisitions. And there was limited M&A activity there. But now when you've had a tremendous, a good solid bull run, particularly in the U.S., now you're seeing a ton of M&A activity. So it's cautionary in that respect. It points towards more of a top. At least you're closer to a top in the market than a bottom.
I'm talking with Ryan Irvine, Keystone Financial, but you find him at www.keystocks.com. Ryan's didn't know this, I don't think, but we talked to his office, and there's a special Money Talks listeners offer, by the way. So if you go to keystocks.com, you click on it, but you don't have to wait for that for a second, though, because when I come back, I'm going to ask Ryan for a couple of recommendations that are on his radar list right now of companies that, of course, what I do is I like their analysis very, very much. They do all the legwork. They do all the time. They talk to the companies. They do the balance sheet, etc. And this is what he comes up with. We'll chat with Ryan about that when we come back right here on the Money Talks Network. Don Henley's The Boys of Summer, 1984. Of course, he was the Eagles' vocalist and drummer. But sorry, I just lost my headphones there. He was the Eagles' vocalist and drummer, Don Henley. Here's the thing, though. Are you ready, Ryan? That was your song request. You ready?
We are taking requests. Amazing.
Yeah. Did you see who wrote the music? Mike Campbell. I'm not exaggerating. Mike Campbell, he's a big writer for Tom Petty. A lot of Tom Petty's big hits were Mike Campbell. Tom Petty liked the song, said it didn't fit for his album, so Jimmy Iovine, who we featured on this show a couple of weeks ago, called Don Henley, or called Campbell, and said Don Henley was looking for his material, and presto, you got Boys of Summer out of that one.
I couldn't have picked that one better. Of course, it was Mike Campbell that wrote that.
Yeah, yeah. Unfortunately, not this Mike Campbell. Anyways, I'd be loving those royalties. Yeah, exactly. Hey, Ryan, you know what this is like for you. You come on, you do a great job for us, but I always got to ask, what are you going to do for us this week? And obviously, when Ryan does the research with his group at Keystone Financial, these are things that he's done all the research on, and of course you have to fit them within your own portfolio if they're appropriate for you in terms of risk and that kind of thing. But I always ask Ryan to give us a couple of examples of what's on his radar right now. So let her rip, Ryan. We don't have a lot of time, by the way, so if you can fire through a couple for us.
Try to go quickly, for sure. Yeah, it's a good segue. M&A activity we talked about. If I had to pick a company that I thought was a takeover target, this would be one of them. It probably only gives it a 25% chance of that actually happening, but Photon Control is the name of the company, PHO, on the TSX Venture. We actually talked about this company at the World Outlook when it was 64 cents 2 years ago. Burnaby, BC-based business. They design, manufacture, and distribute optical sensors that perform a critical step known as etch in the manufacturing of semiconductors. So why is that important? Well, semiconductors are found in computers, smartphones, wearable technology, but what is really driving the growth here is the Internet of Things. So everyday devices such as fridges, coffee makers, they're embedded with these sensors, and they relay data over the Internet. And all of these require semiconductors. So Cisco believes 50 billion of these devices will be on the planet by the year 2020. So that's good business for Photon Control. Why do we look at the financials, obviously. Last quarter, what did they produce in terms of growth? Revenues were $11.8 million, up 67%. Earnings were at 2 cents per share, so doubling almost from 1 cent per share. The company trades at about a market equivalent PE right now, about 18, 19, but they have that fortress balance sheet that we like. They have about 32 million in cash in the bank, which is about 30 cents per share. So we think the company, if you strip that out, is trading about 15, 16 times earnings, which is below the market. So anytime you can get a company with a great balance sheet that's trading below a market PE, we think it offers GARP, or growth at a reasonable price, and we like it here. They have a good backlog going forward, which we like to look at. There is some headwinds from the Canadian dollar being a little bit stronger right now, but we think, we're not currency traders or anything like that. We don't make many predictions, so we want to see what the company can control. The business is operating well. We think the Canadian dollar is ultimately, in a year from now, probably back to where it was trading in the same range. So, that currency inflection is just noise for us near term.
So the symbol for that is PHO, on the TSX Venture Exchange. As I said, time's kind of moving quickly. You've got time for maybe 2 minutes for one more.
Okay, and the company that I would look at here is really a basic business. It's in our U.S. coverage. It's called Meritage Hospitality Group. MHGU is the symbol. What we like about this, it's just a really basic business. They're a consolidator in the quick service restaurant business. Their strategy is to further consolidate existing Wendy's franchises throughout North America. They're doing a tremendous job of that. They started this year with 175 Wendy's locations. Their target is to get up to 400 by the end of this year. They have acquired 69 restaurants this year, and their 5-year growth plan, they're well on their way. They just reported a last quarter where net earnings were up 54% to $3.2 million. The company trades at reasonable valuations right now. We think it trades in the range of about 15 times earnings. The market in the U.S. is about 18 to 20 in that range. So it's trading below with tremendous growth. The dividend, they do pay a dividend, but it's about 0.4%, 0.5%. It has been up twice in the last 2 years. We expect that to continue. We're not buying it for the dividend, but we do like a company that returns capital, that shows they're responsible to shareholders. So we think that this company has a good growth avenue ahead of it for the next 1 to 5 years, and we would hold it over that period. We've already seen tremendous gains in it this year. We bought it at $11 earlier this year. It's trading around the $20 range.
MHGU is the symbol. For more information, go to keystocks.com. Keystocks.com. Got to take a break. We'll be back with a shocking stat.